Good morning and welcome to this weekly market update from AGM Markets. Today is the 24th of March 2014. What we'll do today is go through some technical analysis on Euro, Dollar, Cable, Dollar Swiss, Aussie and Gold. Just going to review what's been going on in the markets over the last sort of week, and then give some sort of outlook for this week, mainly focusing on technical analysis, but I'll have a little look at the Forex calendar as well, just to highlight what sort of high impact news is coming out this week. I will not make any trade calls recommendations in this video. Trade at your own risk. If you could please read our full disclaimer on our website, which is www.agmmarkets.com. And for any new followers out there, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average, the purple 100, and gold 200. Okay, now let's have a look at the euro dollar. This is the weekly chart. Obviously we always have a brief look at the weekly, but as we do these videos on a weekly basis, we sort of tend to focus on the sort of the daily 4-hour, 1-hour setups, the shorter term moves, because the weekly obviously can stay quite static for some time. But I always think the previous weeklies, I mean, if you sort of day trade, I think the previous weekly candle can give you a lot of information in terms of what will happen in the following week. In terms of setups in this weekly, if any of you out there are sort of long-term traders, we spoke about this one, but this one's now sort of not massively of interest, to be honest with you, because first of all, the sellers sort of coming out at 61.8, trying to cap it down. They pushed it down towards the 50%. We came back up, we closed above, and now it's not reacting that technically. But I think the really interesting setup, which you can see much clearer on the daily and 4-hour, is purely just a fib move from the yearly low to yearly high, and we'll keep that on this chart for the daily and 4-hour as well. Actually, I'll zoom back in. In terms of the candles, you can see last week, I mean, we spoke about, I think we said at the start of last week's candle, keep in mind that the previous 6 weeks have all been green candles, so the odds, in my opinion, were towards more of a retracement candle, especially as we're sort of hovering around these highs as well. The odds were, in my opinion, for retracement. That's what we started to get last week. Bearish, we engulfed the previous candle. There's still a bit lower wick on that and a bit of upper wick as well, but it's just a standard bearish candle and a sort of retracement candle, I'd say. And the key thing, as you can see now, we are testing some previous resistance around here. You can see there's multiple candles, candle wick spikes. So we are testing that now, but I think we're going to come down towards this 50% level. So you can see I've left the same fib up. You can see it nice and clearly. So it's the fib from the low of the year to the high. And what's also interesting is we have previous support and previous resistance around this 50% retracement as well, and also the 50-day moving average is sitting around this level as well, and it could flatten out, so we could get a nice bit of confluence there if we come down. That's definitely the move I'll personally be looking at, and I thought a lot of people will be looking out for as well. So if we flip it to the 4-hour, it's the exact same thing. I mean, yeah, you can see we're currently testing the 200 SMA as well, and these moving averages have been quite decent, to be honest with you, on the 4-hour. I mean, I don't personally massively focus on them. I like looking at the moving averages on the daily chart or the sort of 1-hour. But no, they work on all time frames, to be honest. You can see we had a nice bit of support there off the 100, and a nice bit of support there as well off the 50 SMA. And if you look around here as well, nice support as well. But I personally think of you can see today's candle, this current 4-hour candle. So yeah, pretty much today's session is quite bearish, and I'll show you the Forex candle in a minute, and to show you why we've come down. We had some bad data out this morning. Initially we had some good data. You can see it spike up there. We had some bad data, and that's now coming down. So yeah, I think the odds are for it's coming out to the 50%, all the 61.8 as well. We've got previous support around there. And yeah, just keep an eye on the price action. And for any sort of people looking for selling opportunities, I mean, if you're looking at the sort of keep it on the 4-hour, if we get some sort of bounce. So for example, if we do come down towards that 50%, then this would be the fib I'll be looking out for. So just the sort of significant swing high. I mean, yeah, some people will be looking at this one here, but I personally prefer to look at the key high, because it's the same on the daily chart as well. And it just keeps it nice and simple if you look at the high of the chart as well. So you keep on the 4 hour, this is the high of the chart. So yeah, I mean the 50% is obviously a bit further down, but that's definitely the high I'd be looking out for. And yeah, that's pretty much it in terms of euro, to be honest. Nothing else major interested really. It's all about that big setup. I think we'll come down and get some decent action. Let's have a look at cables. This is the weekly chart, and we spoke about last week. We start to get that retracement. Last week's weekly candle closed nice and bearish as well, and it looks like it's just falling off a cliff, to be honest with you. It's definitely, I mean, the 2013 trend was extremely bullish. And it's been due a retracement for some time. You see we've got that stalling period there, about 5 weeks, just chopping around. I mean, we got caught at these sort of 2009 highs here, so key resistance failed to get above, and now it's just in retracement mode, in my opinion. I mean, key support here, well, I mean, it's previous resistance that may turn into key new support. Are these sort of 1.6265s. And you can see it acts as nice support. There is also previous resistance and then acts as new support. Really big level that on this weekly chart. But I mean, I'd say odds are towards a more healthy retracement down towards this 50% at least. And you can see it down where these moving averages are as well. Price does like to come back towards the moving averages, so I think we'll get a bigger retracement down there. But in terms of this week, I'd say it's still due for a much bigger retracement towards the downside. But you can see, if I'll just zoom in here, we do have these spike highs here, big spike highs. You can see we are currently sitting on top of that, so we could get a brief pop up and then it come back down. So if we do, I mean, I'm just going to flip it to the daily or even the 4 hour here. If we, sorry, I'm just going to zoom back out. If we do get some sort of pop back up, I'm going to flip back to the daily actually, then this could be quite an interesting move. I mean, picking the high is tricky. I always just like to choose the high of the chart really, but I mean, there's nothing really wrong with that one there. I mean, to be honest, I'll probably keep both of them up and just see how the action is. But you can see this 50% coincides with previous resistance around here as well, and previous support, so I would not be surprised to see it have a brief pop up now as we speak over the next few days, or it could just retrace all week, to be honest with you, and then maybe on Friday or something we could get a nice reversal at that 50%. It looks like that's what it does want to do at the minute, but bear in mind we have opened below this 100-day moving average here, and you can see we've got previous support on it recently, so it's been acting very nicely. So this 100-day moving average could cap it at the minute. And in terms of levels, we have the 165 level. We've spoken about the last sort of few weeks videos. The round numbers have been acting really nicely, so I still keep a lot of them up there. But the key line in the sand, especially for today and maybe the next couple of days, is this 165 level. Then of course you've got one more on there. So I just need to draw another line again. Yes, I mean in terms, yes, the key line in the sand is these 165s. Then maybe around this sort of 50% level, we have 166s hovering quite near that as well. You can see previous resistance there to the pip, nice support. So that's definitely another level to look out for. But in terms of fib setups, they're the ones. That's one I'm definitely looking at now in terms of a selling opportunity. Another one actually we spoke about. Well, the one that's been quite interesting over the last sort of few weeks. We're looking at this one here, and it's not a pure move as such, because I think the pure move is the one here where you get a nice uptrend and then it just sort of flags down, but it's been going sideways, chopping around off of the round numbers. But still, I mean, it's come down to this 61.8 and it's been acting very nicely, so very technical stuff there. But for it to move really aggressively towards upside, I mean this current 4 hour candle is quite interesting. I think we definitely need to close above the 165 here, for 165.00 level here for sure, for it to get a nice retracement towards the upside. But this is the reason why we're getting this current bounce off here at the minute. So yeah, that's the key level. The 61.8 is why we're bouncing off of. Then I'll be looking out for this move here to see what happens. That is of course if we have put in a bottom at that level. Dollar Swiss on the weekly chart. I mean, I've left this chart up from last week because nothing has changed in terms of this weekly. I still say the long-term bias is for it to come down towards this sort of bigger 50% here at the 0.8519s. And similar to euro, really, I'm looking at the euro and dollar Swiss chart we've spoken about for a while. They do sort of opposite correlate. So in terms of euro, we're looking at a fib from the lows to the highs here on a nice uptrend. On the weekly there you can see, so that move there from year low to year high, and opposite thing on dollar Swiss, we're looking at the move from high to low of the year, that move there. And if we flip it to the daily, there you go, you can see it much more clearer there, and it's a really interesting move. I think so the 50% coincides with previous support and previous resistance as well, so it's a key level. Well, of course you have the 89s here as well, so it looks like it's just in grind higher mode. Really, you can see last week's candle bullish engulfing. It does have a bit of upper wick in it though, so maybe, I mean, it may not reach the 50%. You can see this 89 levels, a key level. We had previous support there, so I'd not be surprised to see it come up, test this 89 and reverse. It's definitely the key line in the sand I'll be keeping an eye out for going into this week. And also on the daily, you've got the moving averages here as well, so keep an eye on what happens at the 50-day moving average. And then of course above that you've got the 100-day, which could flatten out towards this 50% as well. In terms of sort of buying opportunities, one fib I'll be looking at for is this one here. I thought it was going to come back down last week. It looked like it was a lovely uptrend, it looked like it was flagging, but it just bounced off of this sort of previous resistance around here, where I'm hovering the cursor, acting as a new support, and it's just popping up. So it looks like it's not going to come back down, but keep an eye on it anyway. I mean, I would take it off my chart, but if we do start to trace, then that'll be the one that I'll be looking out for. And that's pretty much it on dollar Swiss. Let's have a look at the Aussie. I've left the same chart up from last week, so it's still in play. In terms of this weekly, in my opinion, I think it's still looking towards a grind, towards this 50% retracement, and the 0.92 handle. And interestingly, the 50-week moving average is coming up around here as well. So that should be a really interesting move. If we do get there, there should be some interesting price action. In terms of daily, it has been chopping around a bit. It's struggling to get above the 200-day moving average, so we'll definitely need to see a daily candle close above that if we want to see 92s here. In terms of the 4-hour, it's been playing really nice off these round numbers. We spoke about, I think, in last week's video. It will definitely, because it lines up here, and the 0.90 handle, lovely support, previous support as well. You can see where that bounce there, and then another bounce here. That was last week. So yeah, I mean, I'm leaving it exactly how it is, to be honest with you. Because those levels have been playing out really nice. I mean, it's definitely keep an eye on this one here as well. I'll draw that line up there, the 0.9130s, because that is the key resistance. But it's all just, it looks like it just wants to keep on grinding high, to be honest with you, at that 50%. So I'll be looking at shorts if we get up there. That's the Forex done. Let's have a look at gold. Gold, I've left the same thing on as well on the weekly. I'm just going to delete this small fib here because it looks a bit messy. In terms of the weekly, that's personally the fib I'm looking out for. So that's the highs of 2012 to the lows of 2013. Interesting. I mean, I still think it is looking, the healthy retracement is sort of due, and I think we should get it up towards this 50-week moving average. It may take a while to get there. You can see last week's candle, a sort of retracement candle. I wouldn't say it's a super bearish candle because there's a bit of lower wick, and interestingly that lower wick tested the 50-week moving average and these key sort of supports. So it'd be interesting to see what happens this week. I'd expect it to just bounce up, to be honest with you, because we're testing key support. We had the 50-week moving average as well, and in terms of the weekly perspective, I think we'll keep on grinding higher towards this 50%. In terms of shorter term time frames, we flip it to the daily. This could be a really interesting move if it does keep on retracing towards the downside. This is a sort of pure fib move. And when I say pure, I think it's because it's a standard uptrend, and it's just retracing quite fast. And they tend to be the better moves in terms of hitting at the 50% and then rotating higher and taking out the highs. So yeah, the 50% comes in at 1286s, and yeah, I'm still leaving these supports up because they acted quite nice. You can see a nice little previous resistance, and it's testing the support. I mean, it's not a major support, but it's mini support. I mean, I'll personally be more interested if it comes down to 50% in terms of buying opportunities. I don't massively like this support, but it's interesting just to leave it up there and see what happens. Be interesting to see this 100-day moving average comes in as well. If we do continue to retrace, then this could be a nice sort of buying zone in between sort of 50% and 61.8 as well. And then 61.8, you can notice here where I'm hovering over the cursor, that 61.8 coincides with a big previous support as well. And then in terms of, I mean, if we do get a pop-up, a brief pop-up off these sort of supports at the minute, then I'd say, well, if you're looking at the daily, a lot of people are looking at this sort of smaller fib here, so for taking that high, or if you want to look at the shorter term time frames and more sort of aggressive sellers will be looking at this swing high here, so that's the previous significant swing high on the 1 hour, and looking at that move there. And yeah, that's it for this week in terms of the charts. Let's have a look at the Forex calendar actually. So you can see this morning we had that spike up on Euro from the good French flash manufacturing numbers, and then we came back down on the German numbers as well. I mean, the German ones are a bit more important than the French ones, I'd say, and that's why they've sort of it's been heavily it's gone down very quickly because obviously the German is sort of the bigger, more important country in the Eurozone. And then, of course, we have the G7 meetings all day today, so keep an eye out in terms of news on the wires for anything that comes out from that. Tomorrow at 9 AM GMT with the German IFO business climate data, forecast at 110.9 for the previous 111.3. And then at 9:30 we have some data out the UK, the main one being the CPI year-on-year, forecasted 1.7% from the previous 1.9%, so inflation slowing down there. From the UK, that's what it's forecasted to be anyway. And at 2, I mean, so there's a lot of mid-tier, low and lower tier data as well, but we'll just focus on the high tier data. At 2 PM out of the US with the CB consumer confidence numbers, forecast a fairly similar number, but we're expecting a slight beat on the previous, so forecast at 78.7 from the previous 78.1. And then at the same time with the US new home sales forecasted 447,000 from the previous 468,000, so we're expecting a better number there. And on Wednesday we have some overnight Aussie news. Reserve Bank of Australia Governor Stevens speaking, so keep an eye on that if you trade the Aussie. We have some mid-tier data, some low impact news, and Italian CPI. But the main data out of the day out of the US is the durable goods numbers. So normal durable goods is forecast at 1.1% from the previous poor number of -1%, and the core is forecast at 0.3% from the previous 1.1%. So that's quite interesting to see that the normal numbers expecting a much better number and the core much weaker. So that should be interesting to see. And late at night, if any of you that trade the New Zealand dollar, we have New Zealand trade balance figures forecast at 600 million from the previous 306 million, so a much higher number there. On Thursday, 9:30, we have UK retail sales figures forecast at 0.5% from the previous -1.5%, so expect a much better number there. And out of the US at 12:30, we have the weekly jobless claims forecast at 326,000 from the previous 320,000. We also have US final GDP as well. That is mid-tier data, but that can move the markets a lot. So I'm surprised to have it at mid-tier, to be honest with you, because it is quite important. Forecasting and better than expected number here at 2.7% from the previous 2.4%. At 2 PM GMT with the US pending home sales numbers month-on-month forecast at 0.2% from the previous 0.1%. And then to round off the week on Friday, I have some mid-tier data. So you've got German preliminary CPI, but the main news is out of the UK with the UK current account figures forecast at -13.5 billion from the previous -20.7 billion. Then similar to the US, we have the UK version of the final GDP quarter-on-quarter numbers. Forecasts expect the same as the previous, so flat at 0.7%. Okay, then that's all for this week. Hope you enjoyed that video. Hope you have a great rest of the week trading, and I'll catch you next week. Thanks for watching.